Thank you so much for staying with us. Well, there is growing anxiety in Nigeria's downstream oil and gas sector as operators await the federal government's decision on the future of the Naira for crude deal between the Nigerian National Petroleum Company Limited and the Dangote Petroleum Refinery. Now, the 6-month deal, which began in October 2024, officially ends today, Monday, 31st, 2024, and 2025, I beg your pardon, and all parties involved have yet to finalize whether the deal will be extended or discontinued. The uncertainty surrounding the deal has had a direct impact on fuel prices. With petrol prices rising sharply, dealers have blamed the recent surge on government's failure to extend the Naira for crude deal, which had previously helped stabilize fuel prices. Petrol prices have increased from around 860 Naira per litre to over 930 Naira per litre in just 1 week, with projections indicating that prices could hit 1,000 Naira per litre if this deal is not reviewed or revived. Well, let's stay with this development and other issues relating to the strength of the Naira at this very critical time. Dr. Ayodeji Ebo is the Managing Director and Chief Business Officer of Optimus by Afri Invest. He joins me from Bagada here in Lagos. Thank you so much and happy Ramadan celebrations to you.
Yeah, thank you. Thanks for having me.
All right, then. Well, I think it's right to start by asking you, how much did you buy a liter of fuel? Maybe yesterday or day before if you bought. I know it's no more 860 Naira in so many cases. It's selling for as much as 930, 950 in some cases. And that's just immediately after we heard that Dangote Refinery is not going to sell to marketers in Naira anymore. And now wants to sell in US dollars. Let me ask how that comes to you first and your understanding of what it means for the entire larger market.
Okay, yeah, thank you. So I think the first thing we need to see is that we have seen the result of the Naira for dollar swap for months, and we could see that fuel prices was very stable, and even prices were, why I would say that there was competition between NNPC and Dangote Refinery, which led to reduction in price. Which is positive because we need to look at, there's a direct link between transportation costs, which fits into all other products and services. Cost of products and services is very directly related to the cost of energy prices, especially when you look at PMS and diesel. So with this current saga, with the suspense around the renewal of the deal, what would happen now, what would typically happen is that the demand for FX, so when you look at, is an average of 30 to 40%, depending on the data you are using, of the FX demand for the importation of fuel. So in the past few months, which we also saw that impact on the FX levels, there was appreciation, even building on the back of the Bloomberg the terminal that was introduced by the CBN, the Bloomberg policy that was introduced by the CBN rather. So what we'll see now is that the dealers will need to demand, they will need to demand for FX, which would also cause pressure. We already saw the rates also at the FX market due to the potential demand. So I think that there's a need for us to look at the implication holistically. Nigeria is an import-dependent economy. Whatever happens, if there's pressure on the FX, it affects every other thing, even apart from fuel. So there's a need to see the best approach. Yes, there can be argument for the view that the FX that NNPC should have been giving to the CBN is also giving that, is earning Naira in return of that. But if Dangote Refinery and other local refineries don't have this on the table, they will still need to demand for FX from the CBN. So you see the value chain. So there will still be need for the demand. So it is better to look at the impact holistically. If there's a Naira for dollar swap such that the refineries are paying Naira for the crude, or they go to the CBN to demand for Naira, for dollar. How will it impact? So you would see that the latter will have more impact and more pressure on the FX. So we hope that this should be resolved as soon as possible.
A good way to start this. Many would also look at some of the fundamentals, saying crude forward sales by, of course, the NNPCL. Some would say there are a lot of issues, interest surrounding this development. But if we are to continue like this and to start to buy in dollars, of course, by marketers, clearly that means that we could possibly buy PMS for above 1,000 Naira. And that would definitely also hit our currency. Right or wrong?
Correct, because it's beyond just buying FX at 1,000 Naira. You also look at the impact on transportation prices. It means that inflation rates, which we anticipate that would be declining based on the rebasing, would begin to also move up, because imported inflation would impact, and also food and services would also be impacted. Secondly, FX impacts on all things. We hardly produce in this country. So whatever happens to FX would impact on the cost of production. So there's a need to see the best approach to manage our FX to ensure that there's stability. So on the back of the transparency that is being provided by the CBN, secondly, how do we manage the demand? And managing the demand effectively is that rather than the marketers going to the market to source for FX, you already know that this is almost like a given demand. It would be there. It's whether they go through the CBN or this or the NNPC tries to look for a structure. And it's better to, when you look at it, it's better to deal with a few hands around the FX. Yes, there will be different interests, but what you look at are the pros more than the cons. So when you do a proper analysis, you would see that it may be more rational for NNPC to have that agreement with the local refineries, such that the pressure is limited on our FX. And that would really help. Once the importers, the fuel importers will not need to get FX, or will not even need to import. They will get directly at a favorable price. There can be also structure and control around that favorable price around Dangote, from the Dangote Refinery, rather.
Interesting stuff. Now, let's now look at this vis-a-vis efforts of the Apex Bank, naturally, to help address the FX market. You know, we've seen it's been pretty cool in recent times. We've seen that stability, like you also alluded to in your first submission. All of these efforts by the central bank, if this continues, this might just make everything just look like a waste. What do you think of that?
I totally agree with you that all the gains that we have achieved in the last few months, because it helps even for the business community projecting, it actually helps. So most of this distortion, what it causes, we pay for those inefficiencies, the inability to take decisions on time, all those suspense that we go through, would have to pay for it as a populace. So there's a need for us to have that direction. Clarity actually matters. So there needs to be the renewal. If it's going to be announced, let people know so that businesses can plan. Because once this is not done, it's a no-brainer. There will be pressure in the FX markets. And once that demand, that 20-30% demand returns to the market, the CBN would also require more FX to maintain a certain level of rates. If they want to maintain that rate. If not, the rate too can move from the current 1,005, 1,006 to almost 1,718. It's not impossible once that pressure is there. So the stakeholders that are involved should put the economy forward first at the front burner and give priority to see what benefits the overall economy.
Indeed, we have to be patriotic. Well, let's look at some good news. What's been happening in the market in recent times, particularly figures we see from some leading financial institutions, the likes of United Bank of Africa, Zenith Bank and all. We've seen pretty figures, pretty performance from all of these banks, and shareholders are smiling to the bank. I don't know how you react to that, particularly at this very time.
Yeah, so I can say that's like it's been raining dividend in the past few days. And you would see for some of the banks, you're hearing the dividend per share of 8 Naira, like GT Bank paying up to 8 Naira when you look at it full year, Zenith paying up to 5 Naira, UBA almost 4 Naira. So that is also is being positive. And when you can trace it to the high interest rate environment last year. The MPR was increased by almost 8.5%, and that impacted on fixed income rates, and the banks benefited from that significantly. So that is really positive. So for dividend investing investors, this their time to enjoy the benefit of making that sacrifice to invest. And what we also always recommend for you to grow your investment faster, reinvest that dividend because of the compounding effect. We also call it the snowball effect. So that will help you to build your wealth faster than just taking out the dividend.
Sounds really good, but the reliance on FPI's inflows into the market is also something that worries me. I don't know if that worries you, Dr. Ebo, particularly at this time where we also see what's happening internationally. How well is that going to help us drive our market?
Okay, thanks. The first thing that the foreign investors will look at is the transparency and stability of our policy. Yeah. Secondly, they need to be able to project the direction. So when you see with the subject matter we started with, which is already creating a bit of distortion, nobody knows the direction. What would happen if this happens? So these are the things that will scare away investors. On the back of that, you also look at what is happening in the developed climes, the uncertainty within that space. And if interest rates will remain high, it means that will reduce the chance of getting inflows into emerging markets. So when you look at the percentage of foreign portfolio investors as a proportion of total trades, it's still less than 20% in the Nigerian stock market. So it means that if we get our FX policy right, there's stability. We now imagine that beyond the domestic investors that have been able to sustain our market for almost 3-4 years, having foreign investors come into this market, the prices of these stocks will move us significantly because it's a function of demand and supply. So there's a need for us to be holistic in our views. If we want foreign investors beyond the FPIs, we even look at the FDIs to come into the market or to come into the economy, rather. There's a need for us to create that clear roadmap on where the FX is going, which we're already trying to achieve, because if not for this crude for Naira swap that caused distortion in the last few weeks, that stability, we can enjoy it for 6 months. They will be monitoring to see that nobody wants to come in and there's a major depreciation of the Naira. No matter the return that you're trying to make, that would net off that return. So it's really important to take that into consideration.
very, very important. Back again to the FX market and this stability we've talked about. Before I let you go, I want to look again at the roles of the BDCs, because they've come up again to say they are struggling with shortage of exchange rates. I don't know if the CBN is still giving them allocations as they used to, but in your own understanding, are they filling any gap in any form?
Yes, I would say that the BDCs are really filling the gap for the unofficial market. You know, the process of accessing dollars through the banks sometimes can be very cumbersome based on documentation. And with the once investors see that the spread is not significant like we used to see before, most people would want to demand from the BDCs, because if it's depending on the amount that you require. So they're actually filling a gap. I think I read, I may be wrong, that there's an extension for the BDCs to be able to participate in the Bloomberg, forgetting that the Bloomberg platform that the CBN set up for FX.
All right.
So that is really going to be helpful for them to be able to access FX, which will help create liquidity. So I think that they're actually filling a gap and they are needed. There's just a need to put the proper structure in place.
Dr. Ayodeji Ebo, always interesting having you join the program. It's been really nice talking to you. He is the Chief Business Officer, Managing Director, Optimus by AfriInvest. Do enjoy the rest of your day. I hope to see you in our studio very soon.
Sure, very soon. Thank you for having me.
All right, then.